Hey guys, Omar Khan here from Theta Trading, and today's topic of conversation is how I bought my first investment property and how you can as well. Before we get on today's topic, if I could ask you a big favor, if you could hit that like button, it helps the algorithm out. Consider subscribing to the channel if you like the content we create. Now, let's get into today's topic, how I bought my first investment property and why it could be so important for you as well. Well, I bought my first property a little bit later on in life. I bought it when I was in my mid-30s. It seems like a long time ago, but I bought it in my mid-30s. And the reason I did that is because I never considered investment properties as a vehicle that I wanted to invest in because of the management, the time involved. But 2008, 2009, we had a horrific crash in the stock market. Horrific. The global financial crisis. It was called the Great Recession. That made me realize that I want to make sure that I have at least another asset category, another source of income that I'm coming in other than just the stock market, right? Because the stock market, the stock market does great over time, or has historically. The S&P has gone up about 11% a year, so it has done well over time. However, it goes through those troughs where it can be tremendously draining, and I'm okay with that because that's what I've signed up for. So I thought in 2008, 2009, after the Great Recession was over, I'm like, I will never in my life just own and be part of one investment category. I want to understand multiple asset categories. So I started looking into how do I buy a real estate property. So I joined a company called Rain Canada. We'll put the link there. Now, Rain Canada is a real estate investment company here that provides financial and real estate education. Now, I'm sure there's probably one in your area, but this is the one that I use. And it made me realize that, hey, real estate properties could be a very good asset category for me to own. Now, I bought my first property, like I said, in 2009, just after the Great Recession was over. And like I said, the stock market had gone down a lot. I lost half my net worth on paper, right? It doesn't count because I never sold my stocks. I waited for them to rebound, and I made quite a bit actually on the upside. However, it made me realize that I did want to have another asset category. I started buying real estate. So how did I buy real estate? Okay. Well, what I did was I wrote something called a naked put on stocks I wanted to own. If you don't know what a naked put is, essentially it's where you get paid to guarantee the price of a stock. Now, the stock market had already taken quite a beating. So I was able to guarantee the buy prices on some really beaten down stocks, and I was happy to buy them. So for example, if I wanted to buy more shares of Apple, and this is not meant to be investment advice, this is a company that I like, doesn't necessarily mean that you'll like it. Now, if I wanted to buy more shares of Apple, and Apple's currently trading at $140 a share, well, what I did was I wrote a naked put, which means I agreed to buy Apple, let's say for $135. Now, it's currently trading at $140, let's say. I agreed to buy it $5 below its actual market price, okay? Which means I am guaranteeing the value of Apple, okay? So if Apple were to go down further in value, I still have to buy it for $135. But let's say I'm being compensated 2 or 3% for the month for that. That's a deal that I was happy to take. So what I did was I took all that money over time and I bought my first investment property. So for example, if I agreed to buy 100 shares of Apple at $135, I'd have to put up $13,500. But I may make $300 or $400 just for that 1 month agreeing to buy Apple. And the worst thing that will happen to me is I'll have to buy Apple, which I'm totally fine with. So I took this money. Every time I had $20,000, $30,000, $40,000, $50,000, it all added up. I started buying properties in a town called Hamilton, Ontario. Now, the reason I chose Hamilton is because I live pretty close by in a city called Mississauga, Ontario, and that's about a 30-minute drive. So I wanted my first investment properties to be relatively close to where I lived. So I started buying cash flow positive properties, not properties that I thought were going to appreciate in value. That would be just a simple bonus, right? But I bought properties for the purpose of cash flowing. And back then I was buying properties for, let's say, $150,000, $160,000, $180,000, $200,000 that were renting out for $1,450. Now, my mortgage and my expenses were about $800, so that was a complete no-brainer. I'm like, wait a second, I'm getting $650 positive cash flow on this property, and I only have to put down 20%. So if I'm buying a property, let's say for $160,000, that's only $32,000. And that $32,000 that I got it all from writing naked puts and covered calls. Now, again, if you don't know what those are, I went into a little bit of detail about what it is. Take a look at some of our previous videos, and you can take a look and see what exactly is a naked put. Can it help you out? And the reason I did this is because, I grew up with not a lot of money, and I wanted to get myself and my family to a better position. I'm like, how do I do this while I have a job, right? So I was doing my homework on properties on the weekends. I was trading for about 30 minutes a day in the weekdays. And that allowed me to get enough capital, enough money together to buy one property, two properties, 3, 4, 5, 6, etc., etc., etc. Until one day, I didn't have to work anymore for anyone else. And that was about 9 years ago for me. So I had bought enough properties and I had enough in my trading account that I knew that I never had to go back to work again. So what I did was I said, okay, that's it, I'm done. Because the most valuable commodity we have in our lives is time. Not money, time. Time means everything. You can't get back time. You can't buy time. You can't do anything. Time is literally the most valuable commodity. So I started buying back my time. So I just want to reiterate this process again, all right, guys? Find companies that you like, okay? If this is a strategy that makes sense for you. If you've got a job or a busy family life and you want to get out of it one day, how do you get out of this? Find companies that you want to invest in, okay? Then write naked puts on those companies. Agree to buy them at or below their current price, okay? For that, you will be paid a premium, okay? And the worst thing that will happen to you, as long as you're not leveraging or borrowing additional funds, is that you will own that stock, okay? So again, going back to that Apple example, Apple's at $140. I agree to buy it for $135. I'm guaranteeing the buy price at $135, okay? Now, you might be thinking to yourself, why would someone pay me a bunch of money just to agree to buy Apple for $5 below market price? Well, because that person is buying insurance, okay? So, for example, let's say they have to sell their Apple shares and they want to put those Apple shares into, let's say, an investment property, or they need it for a down payment for a property. Well, they have to make sure that they get 135 at least. They can't afford for it to go down to 120. I am happy to provide that insurance because the worst thing that's going to happen to me is that I'm going to own Apple. So it's a win-win situation. I'm happy to own Apple. That person's happy to buy insurance, okay? Now, again, if you want to learn more about that, take a look at previous videos that we've done on naked puts. It is absolutely life-changing in my opinion. If you figure it out, it can make you a lot of money over the course of your life and, put yourself in a pretty good position. So again, take all that money. Don't adjust your lifestyle. Keep banking that much money. Every time you write a put, bank it. And every so often, it'll add up. And when it adds up, okay, and this is also counting covered calls and your stocks appreciating in price because the stock market does go up over time. Once you have enough money, take a look at buying some investment property because you want to diversify your asset base. So take a look at buying investment properties that are cash flow positive. If you don't know much about investment properties, join a local community. If you're here in Canada, strongly consider joining REIN, R-E-I-N, Real Estate Investment Network. If you live somewhere else, consider joining a local company that'll teach you about buying your properties. Remember, for me, it's always going to be buying properties for cash flow first. Why? Because right now is a prime example. Interest rates have gone up substantially this year, which means property prices have gone down. Now, if your properties are not cash flowing and now all of a sudden interest rates are up significantly, are you going to be able to make your payments? If you can't, you're going to find yourself in a world of trouble. And people think that, you can't lose with an investment property. Well, you can when things like this happen. So I strongly encourage you to look at buying investment properties for the purposes of cash flow, which means revenue in excess of all your expenses and a fair bit too. So ask yourself, if rates were to go up 2, 3, 4%, would I still be okay? Or am I going to have to sell my property? If you're okay, and the great thing is the banks, they don't let you, get yourself too much into trouble. They're pretty good because they're lending you this money. They're essentially your partners, right? So they won't let you get into too much trouble. So you want to look at investment properties that are cash flow positive. And again, how do you do that? Well, you get the down payments by writing naked puts and covered calls and capital appreciation on the favorite stocks that you have in your portfolio. Anyways, guys, I hope that helps. To me, this has actually changed my life. If I didn't learn how to do this, again, write naked puts, covered calls, take all that profit, turn it into cash flow properties. If I didn't figure this out, I don't know where I would be because, it's one of the few things that I could have done while having a job, right? As long as you're willing to put in the work and learn about companies, you can trade on the weekdays, which is not that, it could take you 5 or 10, 20 minutes to trade a day. Not that long. So you can fit it in your day. And on the weekends, concentrate on your properties. If you do that for a little while, you can build yourself a nice portfolio and get yourself to a better life. Get you and your family to a better life, what actually matters, okay? Anyways, guys, Omar Khan here. That's how I bought my first investment property and subsequent properties. I hope you take a look at that process. It is a hell of a process. It got me out of my situation, and I hope it does the same for you. Omar Khan here, guys, from Theta Trading, and we'll see you next time.